What's up, YouTube? CJ here. Bitcoin and the crypto markets are sitting at a very critical juncture right now. What do I mean by that? We just went through a large market correction, and as of today, we are sitting down 40% from all-time highs. A market cap of $3 trillion, we're sitting at just under $1.8 trillion as of filming today. So this is a good time to take a look at your positions, to kind of go through things, think about what you want to do to get ready for the bear market. Did you know in a crypto bear market, we can see corrections as much as 90%? That's right. If you just got in 2021 and you've seen all these nice gains and maybe you're down a little bit right now and just waiting to go back to those all-time highs, it can get a lot worse, guys. All those new hot meme coins you bought, trying to make a quick buck, those things can correct 95 to 99%, if not go all the way down to zero. Hey, fun fact, only 20% of the altcoins from 2017 have survived through till today. So keeping all this in mind, what can you do today to prepare for the crypto bear market? Guys, if you enjoyed this video, please drop us a like and subscribe. Let's get into it. The first thing you can do to prepare yourself for a bear market is to have an investing plan. Sounds easy, right? I personally didn't have one until very recently. It's not that difficult, but what you got to do is start out by writing down what your investing goals are. What are you trying to do with your investment? And this applies to crypto, stocks, or anything that you're investing in. What are your goals and where are you trying to get with that? What outcome do you want? Write it down on a piece of paper. Put it right by your trading desk. Hang it up on the wall. This will help you to keep your head in the game and your eye on the prize while you're making trades and maybe things are going bad or if things are going too good. Anyways, the next thing you can do is to make a spreadsheet of your holdings. I know, you know it in your head, you know what you got, and you look at your phone, and you look at the tickers and you know roughly where you're at, but making that spreadsheet shows you all of your positions. Write down your entry prices. If you dollar cost averaged in, take the average price. Don't forget to include those trading fees because those can be expensive. Also, make a note if these tokens are stakeable or not. We'll get to that later. Once you have the snapshot, put the current price. I know an hour from now it could be completely different, but you need a snapshot from time to time to let you see where you're at. When it's on paper and it's on and right by your trading desk, it's much easier to see where you're at for total losses, total gains, and where you're at in each position. Now that you have your goals written down and you have your spreadsheet, you have your snapshot, the next thing you want to do is set some price targets. What do I mean by this? You need price targets for both bull and bear case scenarios, guys. If things go up, you can't just hold on until everything crashes back down. You have to take some profits on the ride up. Since we're focusing on the bear though, you have to do the same thing on the way down, and things go down a lot quicker than they go up, guys. So having that in mind, set some targets for it to go down. Also, if there's any projects that you were just trying to make a quick buck on, guys, set a target. I'm not going to lose more than $1,000 or $500 on this, and stick to it. When you put that down on paper and you see that it's down $500, cut your losses and get out. It's easy to get emotionally attached, and when you have a plan and it's on paper and it's right in front of your face at your trading desk, it's a lot easier to stick with it. Okay, the biggest thing you can do with after you make this plan, guys, stick to the plan. Again, it's going to help you not to be emotionally attached and trade much better and with less anxiety. Okay, the second thing you can do right now to prepare for a bear market is take a look at your portfolio and start reallocating your positions. What do I mean by this? Go through your list. What are your long-term holds? What are the ones that you're just trying to make short-term or a quick buck on? Take a look at all of these. Put a reason why you want to hold each of these coins long-term. Sometimes writing it down on the paper and then reading it back the next day, or something and the news happens or changes, you might change your mind and want to get out of that position. The next thing you want to do is take a look at coins that are maybe stakeable. Yes, you may be down on these ones, but if there's something you like long-term and you can stake them and earn that yield even through the bear market, hey, that's your decision to make, whether you want to hold on to it or not. But staking can provide additional yield, and those additional shares through the next bull cycle may pay off big. Next thing you want to look at is cutting some losses, guys. Again, If you bought into something, I know everybody wants it to go back up to that all-time high again and you want to get out there or whatever. Listen, nobody likes to lose money, okay? But sometimes cutting your losses is a good thing. I'm not saying sell all of it. If you've done your research and you like the project and you want to keep it, that's great. Maybe sell a quarter or half of it. Take that, put it into some stable coins. Right now on platforms like Celsius and Nexo, you can earn 8.5% interest on stable coins. So even though you're taking a little bit of a loss here, you're getting interest on it and you're sidelining that money for the worst of the bear market. That'll help you recoup some of those losses. Also, guys, the other way, if you have stuff you got into earlier this year and you're in profits, but again, you want to wait till they get up to those higher highs, don't be greedy. You will never time the top and you will never time the absolute bottom. But what you can do is take profits along the way. We're sitting at a critical juncture right now with crypto. We're kind of halfway in between and things could go either way. And the crypto markets aren't the only thing that are going to play into effect. Things like the regular US stock market, housing prices, gold, the whole global economy. When things come crashing down, crypto is going to go with it. So there's outside factors to keep into consideration. Make the safe play, take some profits today. Third and final thing you want to do through the bear market is have that money on the sidelines, or the dry powder like my partner JT likes to call it. Having money on the sidelines coming into a bear market puts you in an advantage. You do not make your money in any type of investing when you sell high. You make your money when you buy in low. That's right. So having that money on the sideline is going to put you in a great position going into the bear market. The one thing you don't want to do, I've made this mistake myself a couple of times, do not go all in on that first big dip. Hey, it's down 70%. Great, it can't go any lower. Oh, yes, it can. Do not blow all of your sideline money on the first big dip. If you've got $10,000 sitting sidelined, split that up into 5 buys. Make that part of your plan. $2,000 each dip. When you see it bottom out, you can spread out your buys over time. This allows you to get the best possible price. Again, you'll never time the top, you will never time the bottom, but getting in over time, dollar cost averaging throughout a bear market can make you millions with crypto. Bottom line here, guys, you need to have a plan and you need to be patient. Do not be emotionally attached. If you stick to your plan, it'll take emotions out of it and it'll remove any doubt from your mind. And hey, when in doubt, zoom out. Take a look at prices from 3 years ago in the last bear market and see where you're at now. Oh yes, it can get that bad, if not worse. Hey, that's all I got for today, guys. If you liked the video, drop us a like and subscribe to the channel. I'll catch you next time.